Hello there. Today I want to talk about how to pay yourself. We're getting to the end of the year, which means we should be planning for taxes. We should be planning for taxes kind of all the time, but this is the time when I get really busy with my tax planning meetings, just trying to make sure everything is in order for the end of the year. So I want to talk about how do you pay yourself from your company? Because if you're a small business owner, this is something you have to figure out. How do you get your money from the business bank account to your personal bank account so you can pay bills and like buy groceries and all the things? And logistically, it's as simple as making a transfer between your accounts, but it gets a little more complicated than that when we go to record it. So if you're a sole proprietor, then your income goes on your personal taxes. Your small business income goes on your personal taxes. It's just an additional schedule. All of the income gets taxed together. So in terms of what to record it as when you pay yourself from the business, you can just put it into an account that's called like Caitlin's personal stuff or something like that. Put your name on it. Don't put my name on it, but you can just put it into an account just because it's not a business expense, so you can't put it in an expense line. But otherwise, that's kind of it. You don't really need to know how much you're transferring. From a tax perspective, I do recommend keeping track of that because you do want to know how much you're pulling out of the company, just from a being able to make strategic decisions point of view. But from a tax perspective, doesn't matter. If you have a corporation, it does matter because the corporation is a separate legal entity, which means it pays its own taxes and you're going to have to pay tax on any money that you actually pull out of that company. So how do we pull money out of a corporation? Well, there's two ways. You can either have a salary / bonus. For all intents and purposes, it's the same thing. It's not the same thing, but it has the same, for what we're talking about, we're going to call it the same thing. And dividends. So the main difference between the two of these is that dividends are paid out of after-tax income. So the corporation will pay tax first, and then you can pay out. And the salary is deductible for tax purposes. So you can reduce your income by the amount you paid out in salary, and then you would only pay tax on the difference. Plus like all your other expenses too, not just your salary, but that's the main difference. And it could be, you might be thinking like, oh, but if the corporation pays tax on that dividend, do I have to pay tax too? Yes, the answer is yes. So you would pay tax twice if you paid yourself out in dividends. The tax on it on the individual side is a little bit lower than the employment income, which would be a salary. So it can be beneficial to pay tax twice, depending on what the rate is. Usually that's not beneficial until you get up into the higher tax brackets because the small business rate and the low personal tax rate is pretty close usually. That's a very ballpark thing. But yeah, so you have two ways to do this. And what the best way is depends on your situation, which is always the case when you ask an accountant something. It depends. So what I normally recommend, if your small business is the only source of income that you have and you otherwise have very simple taxes, that $60,000 or so is about the range to pay out in a salary first. That's to max out your CBP. It allows the corporation to deduct the salary. You get an RSP, like an increase in your room for that year, because dividends don't allow for an increase in RSP contribution room, and then paying out in dividends after that if you need more than $60,000 a year personally. But if you don't, just keeping that money in the company because you defer the tax that you'll pay on the individual taxes, the personal taxes, when you leave it in the company. So I recommend doing that if possible. If you have any questions on that, leave them in the comments for me. That was a really simple, high-level overview, but it sort of gives you an idea of what your options are so that you can then go and chat with somebody about it. I'm happy to be that person that you chat with. Yeah, leave a note for me in the comments if you have questions. We'll chat about it. I've also written a blog post about this, which is a little more in-depth than what I just talked about. It has the same structure, like it goes over the same thing, but it just gives more details than I did just now. So I've left a link to that in the description. It's called How to Pay Yourself. And I've also left a link to my newsletter. So if you'd like weekly tips on accounting and taxes and just all the things, well, all the things that I talk about anyways, not really all the things, then sign up, because I'd love to have you. Yeah, that's all I have for you today. I think we covered lots. I hope you're doing well, and I'll see you tomorrow.